We are pleased to have Marla Sluzalo, a sales associate at ICR Commercial Real Estate, joining us on today's webinar. During this hour, Marla will share with us her insight for what business owners need to consider when leasing a space. Marla has been a sales and leasing agent with ICR for over 5 years. She brings with her a wealth of passion, resourcefulness, and sales experience. Being born and raised in Saskatoon, Marla is dedicated to ensure Saskatchewan remains the vibrant and thriving province she grew up in for many years to come. Marla is continuously driven to producing successful and candid results for her clients. Her enthusiasm for entrepreneurship is shown through her constant efforts to advise and help businesses achieve their real estate goals. Whether a company is leasing, purchasing, or selling their first commercial space or their 100th, Marla is always eager to provide kind of service, expertise, and ambition to each client in their project. For the past 4 years, Marla has been consistently ranked with ICR's top 5 producers of number of transactions completed and placed number 1 as ICR's top deal producer for 2016. Thank you, Marla, for joining us today. Please note that Marla will do her best to answer all of your questions after the presentation. Feel free to chime in during, but she will get to them at the end. If she missed any of your questions or cannot answer due to time restraints, we will post the answers on our website alongside the recorded webinar. Marla, you can start when you're ready.
Great. Thank you, Deidre, for that wonderful introduction. I hope everyone can hear me now as well. And I also want to thank everyone for tuning in and listening to me this afternoon. I hope that I can provide some insight to the wonderful world of commercial leasing. As mentioned, I can get off quite quickly, so I do want to address any and all questions, but I will do that at the end here, just so we don't run out of time as well. And yeah, we can get started here. I've added a little bit more about myself here just because throughout the presentation, I really do stress the importance of working with real estate professionals, and especially professionals that do have experience and have some credible references as to who they've worked with. And so a little bit here about myself. I've been a sales associate and real estate consultant for over 5 years at ICR. We have over 27 agents working at ICR, and 22 are here in Saskatoon, and the rest are in Regina. One of my internally biggest accomplishments was last year I was the top producer for number of deals done. I completed 60 transactions working with different businesses all across Saskatoon and Saskatchewan. One of the most, I guess, recent deals that I'll say that was a little bit more newspaper worthy was I assisted with the sellers of the Hitachi industrial site that sold to the Brandt Group of companies. I also work closely with Beto Developments and the Midwest Group of companies. Now, although these are more notable names, I really do have a soft spot for working with new businesses or businesses that are kind of in their early years. I love entrepreneurship, and I feel that by giving them advice and help with commercial real estate, I help with their business. And this is really why I love working with women entrepreneurs as well. I've been fortunate enough to work with some WESC members themselves, such as Prairie Sun Brewery, Epic Alliance, and Proactive Fitness. And I find it really rewarding when they see these companies growing and succeeding in what they do. And this is just how I play my part. So I hope I can help you all out in your next ventures and go from there. So as mentioned, before I get into some of the basics of commercial leasing, I really do want to stress that every lease and sale transaction within commercial real estate is different. And what is good for one business may not be recommended to another, or may not be the best course of action for the next business. And this is why I want to stress the utmost importance of when you're starting your search for commercial space, talk to a professional. Now, this slide I think is a little bit more geared to residential agents, but it still kind of outlines a lot of what we do and how we can help. And selfishly, I would love if every business owner would contact me, but I do understand that just like picking your dentist, your hairstylist, your accountant, and so on, Not everyone is a perfect fit and will work well together. So it's really important that you find that person that you can do that. So what I will recommend here are a few key points when you're looking for professionals to help you, what you need to look for and why. So as a real estate professional, I would say about 90% of my income is paid by landlords and sellers. So this means that my service is to represent businesses who are looking for leasing space or buying commercial property is free to that tenant or buyer. There are occasions when this is not the case. There are scenarios with tenant representation and unlisted property. I'm not really going to go into that much, but if you're working with a professional, they can go over that with you and kind of explain what your costs may be if these situations do come up. But in any event, the majority of it, there's no real, you're leasing space, you're spending money on that. So that's what you have to spend your money on, not getting the advice from a real estate professional. So I'd say do yourself a favor and get the assistance, because why not? Ask a professional. So the other thing that I can say is if you do get the right professional that can help you, it will save you an immense amount of time, energy, and money. The second thing I can say is ensure your real estate professional is active and experienced in the commercial real estate market that you're looking for space in. I don't do a lot in certain areas of Saskatchewan. Saskatoon, the surrounding area is my core business. I definitely will try and help in what I can, but sometimes I do refer out to other areas. And the one that I see often is that, especially in markets like Saskatoon and Regina, the realtor that sold you your house is not likely an expert in the commercial market. They may be, but I'm going to say probably not. It's kind of the same idea that you likely wouldn't take your new brand new Cadillac to a John Deere dealership to get fixed, yet both are mechanics. So I would just recommend when choosing a professional to represent you and your business, you should ask them about their past experience. Ask them for the references of clients that they've worked with, and ask them why they think they would be a good fit for you. And generally, the answers to those questions will give you a good indication if you want to proceed and work with that person on this big adventure that you're taking. So when you found a professional that you want to help with you in the leasing process, I say be transparent. Um, it's important to be upfront about your business. For example, are you a startup or new venture? Have you been working from home for a while and looking to look at your new first commercial space? Or are you an existing company already in a location looking to expand or downsize? What is the actual nature of your business and industry? Who is your target market and clientele? And what are the number of employees that you have, and so on? Other things like what do you want to achieve? Do you have a target date for your opening? What are your future goals for your business? Do you want to have a second location in the next 5 to 10 years? And where are you at in the leasing process? Have you talked to other professionals? Where are you at? Are you just started, or have you toured through some properties? Um, have you talked to your bank? Have you talked to other business professionals? All of that is very key. And you're going to know if you're talking to a qualified professional because they'll generally ask you these types of questions because it all is very important in narrowing down what type of space you need and how they can be helpful. So generally, once you've decided that you may be in need of a commercial space, most business owners will begin their commercial leasing process on the internet. It's where we all go. And you'll generally search for commercial property or type in keywords on Google for what you're looking for. And more often than not, in Saskatchewan, these are a few of the websites that you may come across. There's ICR, Colliers, Commercial Group, CBRE, and so on. So a real estate professional can help you actually even with this preliminary search, but just like MLS and residential listings, We all like to do it on our own, and when we have a few minutes sitting at our computer, we look. And that's perfectly fine. Uh, one of the few things I do want to go over is just what you're looking at, and so that you have a better understanding to grasp some of the costs and things like that. First and foremost, commercial leasing is completely different than residential. And one of the biggest difference between commercial and residential listings when we're looking online is I'd say 90 to 95% of the time, a commercial listing will quote a price of a dollar figure per square foot rather than the actual total monthly cost. So this is because most commercial leases are categorized as what's called a net lease. So there are different categories of net lease. Here, see here, you can say single, double, triple. I'm not going to get too much into the percentage of gross rent as they're not as common. The triple net is the most common, and generally, I'd say in the United States, you hear more single, double, and triple. In Canada, here we usually just call it a net lease, but there are the difference there. So, what is a net lease? Well, a net lease is a method to categorize the total rent collected from tenants. And the net lease is broken out into two categories. First, the net or base rental rate, and second, the occupancy or operating cost. So the net or base rental rate on a commercial property is what is agreed upon between the landlord and tenant, and it is a set rental rate paid by the tenant to the landlord simply for the use of that property. Now, the base rate that's agreed upon in a lease will never change once the lease is executed. So, for example, if you sign a 5-year lease at $12 net a square foot, that is what you will pay for the full 5 years. No matter what happens in the market, that is what is agreed upon. The only way that that can change is unless you have agreed upon in writing by the landlord. Typically, they're not changing it. That's what it is. This rate is also what's based upon market. So it changes year to year, month to month. It changes depending on the property. It's based upon what other tenants have signed for similar property of similar function, of similar size, and so on. And this is also what can be negotiated depending on market conditions such as vacancy, supply and demand, economic circumstances, and even the landlord's eagerness to lease the space. I actually just came across a dealing where usually landlords would negotiate a little bit off of their list net rental price. But in this particular case, the landlord stated that they were asking $30 net a square foot, and they were not taking any less than that. It doesn't happen too often, but again, we do come across it time to time. So I don't want to say it always is negotiable, but it usually is. So the occupancy costs or operating costs are the actual costs associated with the operation of the commercial building you are leasing. Items like property taxes, building insurance, common area maintenance and repairs, snow removal, landscaping, garbage disposal, property management, common area utilities, and so on can all be included in this category. And all of those combined are what's deemed the triple net lease. So operating costs vary building to building and landlord to landlord. So for example, an office tower downtown will typically have a higher operating cost than an industrial building in the north end. The reasons for this is because office towers are generally taxed higher by the city. They cost more to insure. There are more common areas such as lobbies, elevators, stairwells, parkades, and so on. And they usually require a more complex mechanical and structural system, which then costs more to maintain and repair. So occupancy costs are always quoted as an estimate per year. Now this is because in a given year, or 365 days, an operating expense may increase. So for example, in a year, property taxes can increase. There may be an unforeseen repair that wasn't planned in the budget, or we just may get more snow than is expected, and it still needs to be removed from the property. So on a net lease, a landlord or the landlord's property management team will track these expenses on a year-to-year basis. So this may or may not be the actual calendar year. It can go from July to July or August to August. It's just after 360 days is complete. And the landlord or property manager will tally all the expenses paid by the landlord for the building. So based upon a tenant's proportionate share, and a tenant's proportionate share is the amount of space a tenant actually occupies in comparison to the entire building. So you can see that table at the bottom there, for example. Let's say there's a 10,000 square foot building. It had these three tenants. Tenant XYZ Inc. leases 2,500 square feet out of a 10,000 square foot building. So their proportionate share is 25%. Thereby, they will pay 25% of all the building expenses for that property. I put in for a vacant space there because if landlords have a vacant space, they cannot charge that vacant space of operating costs to other tenants. In this particular case, if this landlord had that unit sitting vacant for a year, the landlord has to pay 30% of their own operating costs. It's not something that can go to other tenants. So with this proportionate share, they will be able to calculate what you actually owe. But don't forget that throughout the year, tenants typically prepay these expenses through the occupancy cost. So therefore, if what you have prepaid is more than what is actually owed at the end of the year, you will receive money back from the landlord. Vice versa, if you have paid less, you will owe money to the landlord. Now, I will state that generally most tenants don't get money back. I have been known a few tenants from time to time that they actually do, but generally landlords try to estimate occupancy costs as close to the actual amount as possible. They don't want tenants receiving large bills, believe it or not, because it does become problematic for them to collect. So they like to get it as precise as possible, but at the end of the day, it's really hard to determine what will happen in the future. So a tenant's occupancy cost per square foot can change throughout a course of a tenant's lease term because things do go up. So for example, if you have been in a space for 5 years, generally what you started paying for occupancy costs at the beginning of your term, not what you will pay at the end. The rate put forth for occupancy costs, as mentioned, is not negotiable. It just is the actual expenses. But the terms within the occupancy costs in the lease can be. And this is where a real estate professional can assist with you and advise what is common practice and not. I'm going to touch a little bit more on this later on in the presentation, but there's a lot to it as well, and it'll take me more than an hour to kind of go through it all, but again, just kind of giving you a little bit of insight on all of this. So now that you have a grasp of the two categories, the net rent and the occupancy costs, and how are they actually calculated and how does it translate into what you pay per month? Generally, when you're looking online, you're going to come across these brochures or advertisements that have these posted rates up there. You'll see the actual available for lease square footage. You'll see a lease rate per square foot and the occupancy cost per square foot as well. So the actual calculations are here. This particular space is a 2,323 square foot unit. It advertises that it's $15 per square foot for net rent and it has occupancy costs of $8.90. So you will add the net rental rate and the occupancy cost to get what's called your gross rental rate. You take the gross rental rate and multiply it by your total leasable square footage, and this amount will equal your annual rental payment. Generally, tenants pay this on a monthly basis on the first of every month, so you simply divide by 12 to get what's called your gross monthly rental rate. In this particular case, for this space, the gross monthly rental rate is $4,626.64. So keep in mind, though, this is not the actual, the final cost to the tenant. There are other costs that may come into play. If you're leasing a downtown space, you may have to pay for parking. In most retail sites, you have to pay for your pylon sign. It varies building to building. There's GST and other applicable taxes. There's your telephone and internet. You may have tenant improvements or renovations that you may have to make to the space. And then you also have just your general moving cost. But this basic calculation will at least give you the proper tools to start assessing the property and understanding the cost per square foot and what competitive or market rental rates are. So on a side note, the reason leasable property is marketed and valued at a per square foot number is so that tenants, landlords, real estate agents, and the general public can compare property on similar terms. Your per month cost will vary depending on the amount of space you take, the building operating costs, and so on. But with the net per square foot rental rate, we actually have a unit of measurement that is comparable. So we can take the general net rental rates in certain areas like Stonebridge and compare them to other areas such as University Heights, the new Brighton area, or anywhere in the city and get a general idea of where these ranges are. So now that you have a grasp on calculating price, another factor business owners must consider is how much space do you actually need? Again, a real estate professional can help you determine this, but ultimately as a business owner, the decision is yours. Commercial rent is always charged on size, so it's very important that tenants are not leasing more space than what you need, but yet to lease enough space to effectively be able to use your space and have the opportunity to grow if needed. Keep in mind that most commercial lease terms that allow for the best negotiation tend to be 5 or more years. You can secure terms that are less, but it's usually at a sacrifice of something for the tenant. So, for example, landlords may consider 1-year terms, but they generally will not negotiate too far from the asking rate, and they may not be willing to do a lot of work to the space for a 1-year tenant. So when you're considering your space, it is important to factor in the number of employees you have and how many you may have in the future. What are your storage needs for your inventory and products? Do you require a showroom or display case? What and how much equipment and furniture do you need? Does your business use require for you to have certain building code standards? For example, a restaurant will have a higher washroom requirement than an office user, and so on. Another factor to keep in mind when determining size is what's called a gross up factor. This is commonly seen in more office towers and office buildings and some retail. So the gross up factor, is basically takes what your usable area is, which is the actual occupied space that you have, and it applies it against the common areas in the building. If an office tower was, so for example, if an office tower was occupied by a single tenant, the landlord would charge the tenant on that entire square footage of the building, the net rent and the occupancy cost, regardless of how the interior design was utilized by the tenant. However, as most office towers are made up of multiple tenancies, landlords need to provide access for all tenants and to construct the building with proper fire code and building code standards. So this means that multi-tenant buildings may contain things such as lobby areas, elevators, stairwells, common washrooms, and other amenities for all tenants to use. In certain buildings, these common areas can add up to a high amount of square footage that the landlord doesn't actually get to charge tenants on because it's not their specific space. So, therefore, these landlords will calculate a gross up factor or a multiplier based upon the appropriate measurements taken from a surveyor, architect, engineer, or a contractor of how the building is divided. They will determine the amount of space used by each tenant and the amount of common area space and calculate what's called the gross up factor. So for example here, if a tenant had occupied a usable space of 2,000 square feet and the building's gross up factor is 11%, we would apply that 11% to their usable square footage. This would add 220 square feet added to their usable space, which would now be 2,200, which is their rentable or leasable square footage. The tenant's net rent and occupancy cost would be charged on this leasable square footage. Most landlords and agents advertise based upon the leasable square footage so that tenants are aware of what they have to pay. You may come across the usable and leasable numbers listed, but just note that the rent is based upon the rentable or the leasable area. A landlord can also, during the course of your lease term, go in and remeasure a particular space, and you may actually find out that your leasable area is more or less than what you have. You see this more often, especially when there's extensive renovations done to common areas and buildings and things like that. But once you have found a space you like and have gone over costs with your real estate consultant and other business advisors, your next step is actually making the offer. I unfortunately don't have enough time to go over all offer terms, but again, every situation is different and what may benefit one tenant may not for the other. So again, this is why I stress that you work with a real estate agent and really sit down and consult with them so that they can guide you as to what terms you can incorporate in an offer and what terms are reasonable versus what may turn off a landlord. This chart generally outlines, though, the steps that will happen once you get to the offer process. Offer terms also change depending on market conditions. So even for those tenants who have leased space in the past, what you once received 5, 3, or 10 years ago may not be relevant today. So the offer is the stepping stone for negotiations with the landlord. It generally addresses who you are, what your business is, the business terms of the lease deal. So what rental rate are you willing to pay? How long of a term do you want? Are you wanting any tenant inducements such as free rent or landlord's work and so on? And what are your timelines for conditions, if there are any? An offer is not a done deal. So an offer is only an offer. A landlord can accept an offer, a landlord can decline an offer, or a landlord can counter an offer. And all three responses are usually dependent on your initial offer and the circumstances surrounding it, as well as market conditions. So, for example, you can present a very reasonable and fair offer, but a landlord can still decline. This could be because another offer was presented, or could be because an exclusion exists with another tenant that forbids your use on site, or for multiple other reasons. Again, an agent can help guide you through this process and provide reasonable options so that you can obtain the best available space for your business. It is very important that timelines, terms of the offer, and conditional dates are followed, as deals can fall apart, what we call go dead, even if they are accepted. Again, your agent can help you remind of these and keep it on track. Typically, in a lease offer, you will have what's called the lease review condition. I do recommend this for pretty much all tenants. This is where you'll be given the lease document, which I will say in triple net leases or net leases is usually very extensive and it's always legally binding once signed. So this conditional period is when you can have your lawyer review and have their legal interpretation given. As a real estate professional only, I can never give any client legal advice or legal interpretation of the lease. I'm not a lawyer. I can provide my real estate interpretation and general knowledge, but again, it's not actual legal advice. So for these next few points, please note this is not legal advice, and I am in no way, shape, or form suggesting that anyone refrain from having an actual lawyer review any legally binding documents like a lease. I'm just going to simply highlight some points in the lease that may need more attention and as tenants you should focus on. So as I was talking before about occupancy costs, in this particular clause, as mentioned, the estimate per square foot paid and the actual amount to be paid cannot be negotiated. What can be negotiated are certain terms defined under occupancy costs. So, for example, most landlords will include a management fee under occupancy costs. And this is reasonable as buildings do need to be managed. Properties that are poorly managed tend to look less attractive and they usually get run down quicker and require more maintenance and repairs. But what I would say is not reasonable is if a landlord decides to have his wife become the property manager and pay her a salary of $200,000 per year to manage the property and charge the tenants this inflated wage. So usually landlords will permit phrasing that will say something like the management fee will not exceed industry standards, or it'll actually give how the calculation can be done. There are property managers that charge a percentage on the net rental rate. I think right now the general average number is 5 to 6%. That number may change too, but basically all of those are generally accepted by landlords because again, by leaving it very open allows for these things to come into play later on. Having a limit on that amount, I think, is also very reasonable and fair. To have limits on things like property taxes or snow removal is a little bit harder to do, especially since a landlord doesn't have control as to what a city is going to charge for property taxes. That, as we all know, goes through the government. So to say it's capped will probably lead more into problems as to making it a gross lease rather than a net lease. Other things like I said, snow removal, especially when you're dealing with a retail site, you need your snow removed so that you can have your customers and employees and clients get to your property. So to put a cap on it just means you're really hurting yourself at the end of it anyway. But there's different things that can go along maybe as to timelines with it. I've seen that the landlord must have the snow removed in a certain time frame, and so on and so on. The next clause to pay attention to is the option to renew. An option to renew is 100% a benefit for a tenant. Now, some may say, hey, wait a minute, Marla, doesn't the option to renew extend a tenant's term, thereby giving the landlord more money and more rental income? And for that, my response is yes, but ultimately an option to renew limits the control a landlord has, and in the end, the lease is really all about giving the landlord the most amount of control over their building. For the most part, I actually do agree that a landlord needs control. It's their building, it's their asset, and ultimately their responsibility if they have no tenants. It's no different than being a homeowner, but a landlord will want to ensure their property is taken care of and remains an asset, not a liability. Where tenants need to focus on is that the landlord doesn't gain control of their business. And that, again, is something that a real estate professional can help look at clauses for, and your lawyer as well. So back to the option to renew. Uh, every option to renew clause is different. So you really do have to read carefully. I'm going to go off of the generally what most say, but I don't want to say it's a definite for each option to renew because it's really dependent on that wording. Most options will permit a tenant the option to exercise a renewal of their term for a specified amount of years. If they give notice, and this can be in writing or well, it usually specifies if it has to be in writing or another notice. I generally say even if it doesn't specify, I recommend getting it in writing, whether an email or a letter or something like that, before a certain time period. So usually most state that once exercised properly, so usually it's 6 months prior to your lease expiration date or 180 days. Some might be less, some might be more. It's just dependent on what days is agreed upon. But you provide your notice before this set time. And then the only items that are to be negotiated is the actual net rental rate. Everything in your lease stays the same. All you're talking about is what is your new net rental rate moving forward for the next 3 years, 5 years, 10 years, whatever your term is as per your option. Usually option clauses outline how the rental rate is determined. So this is typically based upon market rent. When it has this phrasing for market rent, this is how it limits the landlord's ability to pick an arbitrary number for the base rent, which is why I say the option to renew clause is for a tenant's benefit. The option clause can elaborate what happens if market rent cannot be agreed upon. Usually it goes to arbitration with that. Sometimes it doesn't, sometimes it does, but a good option will be very thorough in what will happen if the landlord and tenant cannot agree. So where I commonly see tenants get into problems with their options is the particular scenario where they don't exercise their option in time or properly. There's lots of reasons that tenants do this. Sometimes you just get too comfortable with your landlord and you don't think that the terms are really relevant as a lease. More often than not, you just forget. You signed a lease 5-10 years ago. You'd forgotten about it. You might not be actually aware of the days that you need to provide notice. Just lots of reasons. But there are several times where tenants miss their notice date and the landlord will still honor the option clause and renew a tenant at a fair market rental rate. This happens lots. Life goes on as normal and everyone's happy. However, I do want to say the instances where this can become a costly mistake, and I still advise tenants to always just mark this in your calendar and be wary of it. So, for example, let's say tenant A is a local cafe owner. She's been in business for 9 years, and business is good because she picked a high traffic retail location, and her agent was able to negotiate an exclusive use clause in her lease that forbid the landlord to lease any other space in that development to another coffee user provided she paid rent when it was due throughout the term. So she didn't have competition on the site. She was making money. Life was good. In the tenant's lease, she had also 2 consecutive options to renew for 5 years each, provided that she was to give written notice to the landlord 6 months prior to her lease expiration date. So the tenant's lease expiration date is actually coming up on October 31st of this year. That means that her final notice period to actually give her written notice passed, as it was on April 30th, 2017. So this tenant, she was just forgetful of her dates, as I said, because the lease was negotiated over 10 years ago. And this tenant didn't think that it was a problem, as she was always a paying tenant and she had a very good relationship with the property manager. So on May 25th today, she emailed the property manager notifying her that she wants to stay and she wants to renew the lease and she wants to get the renewal document signed and taken care of. A few days later, the landlord's agent responds to this tenant stating that they have actually received an offer to lease from the competing franchisee cafe for much more money than what she is paying, and as she missed her option to renew within the specified time period, they are willing to entertain this new offer as they do not have to grant her this option to renew because her date was missed. So this is a very bad situation for tenant A, and it actually would have been all avoided if she exercised her option as per the lease. Had she exercised the option properly, the landlord would have been on time. The landlord would have been limited to negotiate the renewal only with her and could not look at leasing the space to another tenant unless she had further defaults or defaulted on her lease, and her rate would have been limited to market. So there are various ways that this type of situation can play out. It's really dependent on the circumstances and who the landlord is, who the original cafe owner is, and who this new person, yeah, well, I'll just use the example if it had Starbucks come in. That's very attractive for a landlord to have Starbucks on their site. Lots of different ways and lots of different variables that could happen with this one. Generally, though, I will say the one that wins out, or however it goes, if the local cafe owner gets to stay, it's usually because she's going to agree to a higher market or higher renewal rate and will have to pay more money than what she would have if she exercised her option on time. Again, it's unfortunate, and I wish the way of the world was a little bit different, but these things do happen. I never like to end on a negative note, so I will state though that although that can be somewhat of a horror story, and those types of things do stand out in a person's mind, please do not forget all the good that comes with commercial leasing. When you begin your process, it means that you're embarking on a new entrepreneurial venture, and that's always exciting and a positive thing. When you establish your business and are looking to expand into a secondary location or move into more space, it means that your business has reached a new milestone and is more successful than when you even started. So, and even though when you may have to downsize in a bad year or even close up shop, it is all valuable learning tools that you can take forward. So when you are ready to embark on your next venture, you will be that much more prepared and ready for success. Well, that's pretty much it for me here. I think we have a few minutes left. I'm happy to take any questions. I know I was trying to get through a lot of topics in a short amount of time, and I definitely don't have enough time to get into everything in detail, but happy to extend this out, that if anyone does have any questions, write them in. I also have my contact info there. I'll also actually write my email in the chat here. I noticed that that's not on there. You can email me or contact me anytime. I'm always happy to answer any question, even if you think that it may be silly. It's all part of the process, and it'll all get you to your next commercial space. So thank you, everyone, and yeah, that's kind of where I'm at.
Well, thank you very much. I'd like to extend a very big thank you to Marla for taking time to share her insights with us. We had a lot of really great information and great coverage of such a vast topic, but we made it easy to follow and had a lot of fantastic tips and how to go about leasing a space. Your webinar was incredibly valuable, and we are definitely excited to have you on board with us today. And I'd like to thank everyone who joined us today for being part of this and learning. Just a heads up that our next webinar is going to be on June 20th. It is called Your Brand, More Than Just Your Logo. And our presenter will be Jess Paul from Blossom Communications. So please check your emails or visit our website to register. And with that, if you do have any further questions for Marla, feel free to send her an email. And we'll see you at our next webinar.